is now time for the Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome. I'm Steve Rhodes, host of the Trader's Edge, folks, and it is absolutely so great to be here with you. Hopefully, you're off to a fabulous Friday. It is Fabulous Friday. I am looking so forward to not only today, the weekend. I hope that you are as well, folks, and make sure that you have an absolutely great weekend. Quick tour around the markets here. You got the Dow futures up about 58 points or so right now. Heck of a day yesterday. We're going to certainly talk about that. The ES Mini up about 6.5, trading out at 1404.75. You got the NASDAQ futures up 12. You got the small caps up almost 4. King dollar taking a little break, testing a support area this morning, trading out at 79. That's down 35 ticks. Gold trading up $15 out at 16.69. Our call number is 877-927-6648. A quick spin around Europe and Asia. You have the DAX trading up 70 points right now. The FTSE up 36. The Nikkei down 31 points. Oh, that was a beautiful thing. I wanted that Nikkei to close flat or low. We'll take a look at that weekly chart out there that we're looking at. Those channel lines finished inside the channel suggest that maybe the Nikkei will pull back, give us an opportunity to buy some of those great stocks over in Japan, or maybe the index. You get the Shanghai up 10, the Hang Seng off 53. So you could say Asia was a little mixed last night. Our markets, certainly, they are up at the moment. And, you know, folks, I get emails all the time, and thanks so much. You're always welcome to send me an email, steve@tfn.com. I try to get back to all of them, but just really great comments. You know, a week ago today, I was kicking off the Master Trader Series in Denver, and have spoken to each and every attendee, either by email or by voice since then. And, you know, it was such a great week last week. Had such a blast doing that. I'd like to be able to have the opportunity. I had some great emails from questions of folks, you know, asking about attending the course. You know, what I know is that I would never ask somebody to do something that I haven't already done. In fact, the only way that you can actually move someone, if you're really trying to move someone in your life, you've got to be moved. And it becomes easy for me in this instance because when it comes to the Master Trader course, it's the entire reason why I'm actually here in front of you today. You know, that is jumping through that window, turning that mirror into a window. And that's what I really talk about, you being able to do with anything that you want to accomplish in life. When you want to make the impossible possible, it's just getting rid of yourself. That means turn your mirrors into windows. It means jump through when the universe presents you with an opportunity. And the universe is always presenting us with opportunities. That's what I'm sure each of us really love about these markets as we take a look at them. And, you know, I want to be able to teach you how to trade these markets, what the information, because there's information being sent to us all the time. If you just sit back, you be calm and relax, you become aware of ABC patterns, you become aware of expansions and contractions, you understand where different support and resistance is. How about maybe just what the candles are telling you? You know, if you take a look at the ES Mini that's on my chart here right now, what you're going to see, this is just a 30-minute chart, but if you just take a look at coming off the bottom yesterday at around 12 noon, what you will see is what? Higher highs and higher lows. That says right now, at least this little leg that we're in, that would be bullish. So there's what you want to be able to do, folks, is you don't want to complicate it. You don't need to complicate it. But what I want to do is I want to help move people. I want to help them turn those mirrors into windows, folks. I want to help you jump through. It doesn't matter what level of skill. Got a great email yesterday from one of our officers, one of our local officers, been in the police department for years. I don't remember exactly how many years, 20 plus years at least, and providing us with service. Talk about somebody putting their life on the line for each and every one of us. He's looking to be able to find a way to be able to manage his money. He wants to, it's getting a little bit more dangerous each and every day when he takes a look at his career. And so he wants to be able to learn this game. And, and he did a great analysis of, hey, if I really wanted to understand how to manage my money, I wanted to understand how to trade, I could go get this degree, that degree. Well, the reality is, in just listening to the show and what he understood was that I'm going to be able to take anybody who attends that Master Trader course, take you from where you're at to basically compress decades into days. Because what you're really getting is you're getting the best of Tom O'Brien. You're getting the best of Larry Pesavento. You're getting the best of Bud Rolfs. You're getting the best of Tony Robbins, which, folks, 80% of what it is that we do here, it is a mind game, and you've got to be able to get your mind straight. And what that really means, folks, and I'll leave you with a message, and we can go take a look at the markets or anything else you want to do. because the question that came from some of the emails yesterday was, what's one thing? You know, it was like that Curly, if you will, from that movie that Billy Crystal was in. I bring it up. I got to remember that. But it was Curly. It was right. You just need to know one thing, right? It's just that one thing. Well, I'll tell you what, and then somebody said, well, it's just the one thing. If there was just one thing for me to focus on, concentrate on, what would that be? And I would say this, and applies to everything you do in life, folks. Yeah, City Slickers, that's what it is. What that one thing is know your outcome. You know, what is your outcome that you've got for today? If you're trading these markets and you're in some trades, what is your outcome? Understand where your exits are. Your exits at if your trade works out, and where are your exits if your trade doesn't work out. But know your outcome in anything it is that you want to do. So this weekend, when you're sitting back, if you're going and you're going to have fun, maybe you're going to go play golf, maybe you're going to spend some time with some loved ones. I certainly am. I get to go up and spend the weekend with my daughter up in Tallahassee. That is going to be a blast. And I have certain outcomes that I know that I want before I leave, that I want to make sure are in place. And so just simply know your outcome in life, folks, and just know it each and every day. And life will just simply continue to be like this little trend that we're in here in the 30-minute chart. You will be in a bullish trend. So let's go take a look at these markets. Let's go see what in the heck we're doing. Let's go back to where we were yesterday. And I'm going to go ahead and I'm going to erase this. Now, you can watch us on Tiger TV. For everyone listening to us on the radio, thanks so much. You might want to even catch the archive of this show, which you can get on Channel 9. Otherwise, maybe you're listening in. You can watch us on Tiger TV. Go to the homepage of TFNN.com. Click on the Tiger TV button, and you're just moments away from being able to see my charts and see the patterns that are out there. And folks, each of us have patterns. Each of us. You just simply want to know your patterns, or you want to know the patterns in the markets here, because they repeat on a continuous basis, and they give us plenty of information in order to be able to go ahead and place a trade or make an investment. You know, if you're taking a look at the longer-term chart. Right now, I've got the 30-minute chart. If you're looking to invest in something, you want to look at a weekly chart, a monthly chart, more than a 30-day chart. And so when we do take a look at knowing your outcome, well, one of the outcomes is understanding patterns, understanding ABC patterns. So if we simply just go off to the highs, and the high out here is going to be a high swing point going back to 5:30 in the morning on March the 27th. Seems so long ago, with today being the end of the month. We're going to see the B point was formed at 6:30 in the evening on the 27th. The C point when it moved up into 4:30 a.m. on the 28th. Now, what you will see here, when I use this formation tool, what I do is I identify where that 1-to-1 is. That 1-to-1, that's your A to B equals C to D. We're talking about this leg here. This A to B equals C to D in price. That would have brought you to a price of $13.97. I also put in there the 1 to 1.272. That would take it to $13.93, and then the 1 to 1.618. Why? For those lucky folks, and there were a lot of them, and I know Tom was on the air a lot yesterday, so I know how he was feeling, especially after last Friday and Saturday, going for 10 hours straight or more. And that 1 to 1.618, for those folks who attended, I'm sure that they heard Tom tell them when you do a 1 to 1.618, A to B equals C to D, it is almost always, folks, and I mean almost always, an immediate change in trend. You do a 1 to 2, A to B equals C to D, almost goes away. It is going to be a change in trend. So when you get to these extensions here, what you're really looking for, those are really the ideal trades if you've got the patience to wait for them to come down there. Now, my clients and I, we went ahead and we got in going long the ES Mini. We got in there when we made this bullish engulfing after we made this 1 to 1.272. We knew it wasn't going to make a 1-to-1. You could tell that just simply by this candle as it was making its D point, and it moved all the way down. We waited for a signal. We got that signal here. This is the bullish engulfing candle. Yesterday, now, when you want to know your outcome, folks, you always, when you're getting into a trade, you want to understand if this pattern fails, where could it go to? Well, certainly what I knew, especially by the way that we had this long-range bar coming in here, by the way that we still were in the left-hand side, you see, this formation, so I'm not going to change it here right now, but if you just simply continue to draw this line down here, you know, as the 1.272 were completing, you were on the left side because that would have gone maybe about right here. And what that's telling you, it's giving you a real clue as to the strength of the market. You don't have to overcomplicate things. All you have to do is just understand strength and weakness, and it displays itself either in candles or it displays itself on the angle. And like I say, don't complicate it. I can absolutely teach you how to manage your money and manage these markets. And what you'll be looking at here, folks, is sure enough what the market did now. When it got to 1.272, it moved up. In fact, what it did was a little retracement there, a normal breathing pattern. The EKG went from the B point all the way down to the low there. And what you will see is the 618. Remember, we talk about that sweet 618 because that's what you're going to do when you're going to visit us in Clearwater. Well, the 618 off of that C to D leg would have taken you to 1404.50. Guess what it actually got up to? 1403. No, wait. Hi. 1403.25. 1403.25 versus 1404.50. Folks, in my book, that is absolutely close enough. Then the market moves down. And where does it move down to yesterday? Gets right into that 1.618. A to B equals C to D before it starts its move up, folks. 877-927-6648. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. And still the futures pointing up. Dow futures up 55 or so. S&P's up 6.5. Now, what I have on my chart here right now, if you're watching us on Tiger TV, is I've got the Dow chart on a weekly basis. So let me offer you a lesson. Let me teach you something in my weekly. I do a webcast for my clients every other week. Ends up being an hour training session. We take Q&A as well as, I find something important. It might be a trade that we're getting into, but just something important in order to be able to manage these markets, manage your money. And you're taking a look at two lines. So I'm going to show you a lagging indicator out here. I've talked about this before. Now, this when I in my newsletter each day, it gives you a long-term, an intermediate term, and a short-term outlook. That way, I wanted to make sure that there's total clarity with regard to at least the way that Steve is thinking. And that way, it's right there up at the top. Everybody understands that. And it was a great question that was posed because if you had heard me on my radio show back in the fall of last year, what I was doing was I was sending out a caution sign such as get your money out of the market. And what I was really using, I was using this technique here. It's a technique that any of you can use on your charting software packages. It's using the exponential moving average. I use the 50-day and the 200-day on a weekly chart. It ends up being a 10-week and a 20-week. So, you just need to go ahead and make that conversion. Now, the blue line here, in essence, I'm just referring to it as a 50-day and a 200-day. And when the 50-day is crossing through the 200-day, folks, and this is, I use exponential versus simple moving average. It says, okay, we are in a bullish trend. It's where you have what they'll refer to as the golden cross. Now, I'm going to go ahead and so here's where we're currently at. And you can see now it's a lagging indicator because certainly the lows were made out here back in October 4th to be specific, or the week of October 7th. That's where my little crosshair is right there. And that is, so there was no lagging indicator right there giving you a bullish signal. There were other leading indicators that we use, but those are the ABCs. Those are using tick and trend indexes, candle patterns, a number of different things. But let's just stay focused on a lagging indicator that can save and make you all kinds of money. And so what I've got here is I've got the weekly chart. And I'm going to go back in the Dow. We're going to go back as far, I can't go back to 1928, but the data, for whatever reason, I can't get that here. But how about if we just simply go back it looks like, to the week beginning April of 1974. Would that work for you? 74, we got 74 to 84, 94, 2004, 2014. How about 40 years worth of data just to understand, if you just use just that one indicator that I'm going to show you, what that would have done for you. In this case here, if you go back and you take a look in 1974, back in May of 1974, you would have seen that cross. That cross would have told you go to cash. If you can't go short, go to cash. In fact, if you had gone to cash, look where you would have gotten out right here at about the 856 area. You would have come back in right around here, right around the 700 area. And what it would have saved you was what we'll call a heck of a lot of aggravation, a heck of a lot of concern, as you would have come down into 1974, down into the lows in that 570 area. How would you like to have at least had peace of mind? Well, folks, this will have peace of mind for you, and I want you to be able to utilize this, even if it is a lagging indicator, because what happens during this time period, just like has happened here from 2007, when people were enjoying the high life, not the Miller high life, but every other kind of high life that was out there, and then folks were getting out towards the end of 2008 and the beginning of 2009, and many of those folks are still on the sidelines, once bitten, twice shot, or however it goes. And what happens is that there are just simply some tools. You've got to be able to take control. You've got to know your outcome. And your outcome cannot be, in my opinion, to make 1 or 2% on your money. And so you want to be able to know your outcome. You want to understand there are some simple things that you can do to take yourself out of harm's way. When this crosses back through, when you get that golden cross, because this is called the death cross, and you want to be aware of that. When you get that golden cross, you come back into the market. In this case here, it crossed right in this range. You would have been in the market maybe in the low 700s, 700 maybe to 750, somewhere in that range. Look, you would have stayed in the market. You came down here and all you did was you touched it. You would have stayed in the market until you had your next death cross. That would have been February 1977. So you would have gone from 74 to 77, staying long. You would have gotten out now in the 950 range. So we got that death cross. And look what would have happened here. You would have got out of the market, and you would have been out in the 950s instead of getting out maybe in 1978 when it got back down to 736, when it made that move of a move, folks. Look at this as I come across here, folks. This is something you absolutely want to understand. It'll help you to have peace of mind. Give my newsletter a shot. That'll give you peace of mind too, folks. We'll be right back.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report, with over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar. The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow up 47 points, S&P up 5. You've got the composite up 14.5. Small caps leading the charge, up up about 0.6%, up $5. Apple flat right now. Cisco up 10 cents. Google up 3.79. Intel up at 19 cents. Microsoft up 12 cents. If we take a look at what's moving and what is grooving out there, let's look at the movers. We got CF Industries. They're leading the charge. Dollar-wise, they're up 2%, up $3.56. LinkedIn up $2.69. You've got Sina Corp, SINA, they're up $2.15. Amazon up $1.82. Wyndham Worldwide, WYN, they're up $1.70. Baidu's up. Vivus Inc., they are up 84 cents. Monsanto, MON, they're up $1.08. Nike is up a bit, about $1. BHP Billiton up $1. That's what's moving. Potash, they're up $1 as well. How about what's grooving to the downside? What's grooving to the downside? You've got Shire PLC. They're down 4%. They're down $4. SHPG, Finish Line Inc., I believe they're the shoe company. They are trading off $2.40. You've got X-Rate Techs Limited. They're off $2. Tibco Software down 71 cents. Raytheon, InvenSense, INVN, they're off 57 cents. Red Hat down 42 cents. Apple off $1. Best Buy off 46 cents. 877-927-6648. So dollar losers on the way down. Only four that are over $1. Everything else under $1. And so what I do have on the screen here, I do have the ES Mini 30-minute chart. We were taking a look at lagging indicators. Now let's go take a look at some leading indicators that are out there. I love those leading indicators. Those are your ABCs. Those are your retracement levels. And those are your candles, folks. So when we take a look at the ES Mini as it came off of the bottom yesterday, if we take a look at a couple of different retracement levels, the first one we're going to look at is going from the high at 5:30 in the morning on the 27th. So we're going to take our retracement tool as soon as Steve can find it. There we go. And we're going to go from the high all the way down to the low that was put in at noon yesterday. Again, that low at noon was in the 1386.25 area. What you're going to see, let me get rid of the ABC just to make it a little bit, get rid of some of this stuff out here for you. There we go. So now what we're taking a look at, you can see that you've made a 0.618 retracement off of the high. So as you make the 0.618 retracement, you're typically going to do something else unless you're powering through it with some type of wide-ranging bar. Do you see a wide-ranging bar here? I don't see a wide-ranging bar. In fact, the reason why I'm looking at it is because what I see is where it indicates to us it's going to slow down, and then it not only does it do that, it goes ahead and gives us a bearish candle. Now, until we get a close below that area, and we'll come back and take a look at it, but there are signals, there are leading signals that these markets give to us each and every moment. And I just simply want to be able to teach you how to utilize that for your trading style, for whatever it is, so that you can be calm and understand if the markets are behaving in a normal way, which they do, folks. Now let's take a look at the retracement off of this other swing point out here, which is at 4:30 in the morning. That is at 14.1225, all the way back down to the low here. So we come all the way down there. And what you're going to see, folks, you're going to see the 0.786. Let me try to expand it out here so you can see it. This is the small little, you can see you've got two lines coming together right here. Those two lines represent a 0.786 of a swing point and a 0.618 of a swing point. All you need to do is take you need to understand swing points. That's easy enough for me to be able to teach you that. Want to be able to teach you sacred geometry. Retracement-wise, you're looking at 618 and 786 being the keys, and expansions, 1.272 and 1.618. I promise you do it in your life without even knowing it if you measured your life by math. Well, we do measure the markets by math, and so you came into an area right there where you would expect to see that pilot put on that turbulence sign, and sure enough, you get up there. Now, what you gave us, I'm going to get rid of those retracement levels. And now let's take a look at the candles as you're making your way up, as you're crawling up here, and you're looking for some type of tired and bearish candles as you get up there. Well, as you got up into that 618 and 786 area, you received a candle formation right here, this little doji at 8 a.m. this morning that said, hey, I'm getting tired. When you see that, that's either going to be the halfway of the move, which is possible, or it certainly says, you know what, time out. I need a little bit of rest, just like I did when I got back from Denver, just like Tom did last night after going so hard. In this case here, the market was going so hard into the 618, 786 area. It is a normal spot to want to either refresh or take your money off the table. Now, with today being the month end, with us, with it being such a great quarter, since 1998, you've got to be a little bit concerned about money being taken off the table here, because what a great way to do it if you are a professional money manager, which that's what I want you to be. Now, when we do that doji, it's that candle that follows that says, ooh, now it may be more than a little bit of a timeout. That candle right here is the bearish engulfing candle. Now, not just because it engulfed the prior doji. You see, if you take a look at that doji and you take a look at my screen here, what you'll see is that it opened and closed 1405.25, opened at 1405.25. And if you take a look at this candle that was made during the 8:30 session, that it opened right at 1405.50. So a quarter of a point above. That's enough to go ahead and engulf that candle. Engulf 1, 2, 3 candles there is what it engulfed. And what we're looking for here is, what you don't want to see is you don't want to see it close below 1403.50. You see it close below 1403.50 by 10 o'clock. So we've got a ways to go here. We're in that half-hour session. Then that says to me, you know what? There's going to be a retracement that's going to go on. And so where would that retracement be? Well, that retracement would go all the way from the bottom that we put in at 12 noon yesterday. That's in the 1386.25, all the way up to the high that was put in here at 8:30, which was in at the 1406 and a quarter, 1403 and a quarter. So your normal retracement, folks, would be only down about 1398 and 75 cents, possibly 1393 and 50 cents, or even. So, you've got to understand where you're at in your trade. If you see this close below here and you would be giving back too much profits, then what you would want to do is you'd want to go ahead and tighten up your stop. And if you do not see it close below there, then you don't really need to take any action at all. That's why understanding leading indicators is so helpful in understanding your day-to-day or what the market is doing. So 877-927-6648. How's that for a Friday morning lesson on candles, leading and lagging indicators out there? So now let's go take a look at what's moving and what's grew. Let's go take a look around the world. Let's see what we've got occurring around the world. I did mention the Nikkei, so I want to go take a look at that Nikkei because that's got some beautiful channel lines in there, some long-term channel lines. So let's pull that up here. That's this chart right here that we're taking a look at. This is a weekly chart, and we did get the confirmation on the weekly chart that, it was not ready to break through this downtrend channel, and that, folks, is a beautiful thing. Why? Because you could see the Nikkei go ahead and pull back and do just nothing more than a 0.382 retracement. That would take the Nikkei down to the 94, looks like about 94.45 range. So 94.45 to 89.45 would be really beautiful. And the reason why I say 80, let me give you the exact price. The reason why I say 89.48 is because that's where you really had some conviction inside this channel with the Nikkei, and it would be nothing more than a normal pullback, pulling back into that 0.618. But if we take a look at this longer-term channel line, this is going back into the 09, the June 09 area. The high that we're looking at is in the April 2010 area. You can see how this channel line has held as a resistance, how the bottom of this channel line has held as support. Any of these breaks to the downside, those were false breaks. The only break you can really have out here is to the upside. That did not occur, and that was the close that I was looking for on the Nikkei. If we go take a look at the DAX and the FTSE, see what they're doing today. You can see the DAX right now is at a doji candle. It opened up at 69.2482. You're trading out right now at 69.25. Obviously up off of the close from yesterday, and now it makes a lot of sense. Now the DAX, I believe, has got more work to the downside as well. It did make this A to B equals C to D, completed that pattern. We were looking at that yesterday, but the way that you came down with a wide-ranging bar, and you came down, you are on the inside left. That means you still have strength inside this move. Really, to me, looks like the DAX wants to move into that 1.272 area before it gives us any more information. That is going to be 67 and the about 67, 89, 90 or so. But what it's doing, what I want you to understand, is just the normalcy of the markets when you make these A to B equals C, D patterns. If we take a look at the FTSE, see what the FTSE is doing out there. The FTSE trading up a bit. FTSE trading really inside this range. Now, it did break this this consolidation area. All you did in the FTSE today is come back up here and test the breakout candle from February 3rd. We mentioned how important that February 3rd date is for you to benchmark, even if it is not a swing point, because it's where our markets in the U.S. took off. It is where we see even the FTSE itself had a huge day, and that area has pretty much held as support. You're closed below it. Now, folks, I take a look at a number of different indicators in the markets, and I can tell you that even the NDX, I take a look at something called the summation index. To me, that is where you really understand the trend is your friend. It's a shorter-term indicator, but I can tell you that ticked down yesterday and the day before. That's not a good sign when you take a look at strength out there, because strength is starting to show its weakness. Now, that means as we come into Monday, you know, they talk about go away in May, and I remember when we came into the May 2nd time frame, I had shown folks chart studies going back for 10 plus years or so, taking a look at that time period, how often it worked, and just simply, just simply being able to just tighten up your stop. Well, the May 2nd ended up being, May 2nd, 2010 ended up being our highs. That lasted quite some time. And so the question is going to be having these indicators, these summation indexes ticks down. I mean, the only tick up yesterday in the summation index was in the utilities, a defensive area. So it says, you know what, maybe it's not going to be sell in May. Maybe it's going to be sell in April. May not start today, but I think we need to be very cautious as we come into next week. And so my 2 cents worth. And so let's go take a look at the currency market. Let's see what's going on in currency. And what you can see here is you've got the euro. The euro trying to go up and test the swing point high from March 27th. That swing point high is 1.33844. You got up today into the 1.33755. There is a Gartley sell pattern that is in place here. My preference would have been to have seen it complete this A to B equals C to D, which would be right up here in the 1.34136. Oh boy, if we had a move up there today just to test that and then give it up, that would truly set up the Gartley pattern, and we'd see some real juice in these markets. You'd see these markets up nice, and that would be a nice thing, because right now I'm go long, go strong. And let's go take a look at light sweet crude, see what light sweet crude is doing now. In the case of light sweet crude, folks, light sweet crude is below an area of support. Used to be resistance. That's what these bearish engulfing candles here that we've got. And if you take a look at light sweet crude, you can see this area here, understanding your candles, folks, is so important. In fact, I'll go back to that Dow chart. We'll take a look at the weekly or the daily. You'll see that by understanding where your bearish engulfing candles, that was a leading indicator. That could have gotten you out of the market before the 50-day crossed through the 200 moving average. And if you take a look at light sweet crude here, you can see how this area here, it gave us signals that the market wanted to move lower, that price wanted to move lower. Once you got above it, that area which used to be resistance becomes support. That area has held. You know, we had a breakout. We had a gap up when we came back from President's Day, I believe it was, on the 17th of February. It was really when we came back on the 21st because we had the Monday off, and you did have a gap up in light sweet crude. That gap was filled finally for sure yesterday's trading session. Right now, you are trading out at 102.94. You are trading below the area that used to be support and now may be becoming resistance. We'll see how the day closes. What I do believe is that light sweet crude is on its way down into the $98 area. That would be nothing more. Let's just get rid of some of this stuff out here. We can redraw it. Let me get rid of this ABC pattern out there. Let me get rid of that line. And, folks, that would be a normal retracement. Why? Because we're just taking a look at going from the swing point low on February the 2nd when you had light sweet crude trading out at 95.44 up to the high that was put in on March the 1st up at 110.55. I don't know about you folks, but I don't like paying $4.25 for a gallon of oil when we are sitting on huge reserves here, and they're mine. They're yours and mine. We got to get this government of ours to listen to us because those are your resources, my resources, and there's no reason for us to be paying $4 plus. Heck, if you're in California, you're paying $5 a gallon for gasoline. It's not necessary. I do take a look at the light sweet crude pulling back into this 98. 101.21 is going to be the 0.618, but I do think that we'll see light sweet crude pull back into $98. But first, it's got to close below this area of resistance here, which is in the 103 range. That's on light sweet crude. Let's go see what we got that's still popping and dropping. Maybe we'll go take a look at that when we come back from this break here. You got Priceline up now, $6. Pioneer Natural Resources, PXD, they're up $2. CF Industries up $2.83 on the downside. You got Apple down $4. We should go take a look at that Apple chart. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. 877-927-6648. And what I got up on my screen here, game on, if you will. We got the Apple 5-minute chart. And the Apple 5-minute chart making a beautiful, I do mean beautiful, Gartley buy pattern. What you've got here is we're coming off of a swing point area. Let me get my chart up here. We're coming off of a swing point area in about the 10:30-ish time frame on the 26th of March. Low put in there in the 595 range. Apple moves all the way up into the highs on the 28th. Gets to that 621-ish area about 9:45 or so in the morning. Pulls back into the 12 time frame on the 28th. Gets down to a 610 area, makes a 70% retracement up into the 3 o'clock time frame on the 28th, and then proceeds to trade down to this morning, which was really at about 9:50 when I went ahead and pulled the chart up. Now, what you're taking a look at is beautiful. Beautiful sacred geometry. You've got a 1.618 expansion of this B to D swing point. That's really the expansion from this B to C swing point. Beautiful geometry here, sacred geometry, 1.618, and it was a 618 retracement. You want to be able to see those types of sacred geometry numbers coming together, folks, and then you're looking for some type of candle signal to let you know that Apple's ready to move forward. Well, you don't have that candle signal just yet, but you do have that beautiful sacred geometry. Now, taking a look at the volume as was coming down there relatively hard on the 5-minute time frame. Of course, when you do the multiplication of it, in 5 minutes you're doing, let's see here, 900,000 shares times $600. I can't even do the math on it, at least not in my head, but it's a few dollars that are being moved here. So look, this area here is going to be very important. Why? Because if it fails, then where is Apple going to go to? Pretty easy if you're just looking at a 5-minute chart. Where Apple will go to is that 0.786 level. That would be 600, let's just say 600 on the button or so, and that's if Apple fails. That's why these Gartley patterns are so cool, especially when you see the sacred geometry, because areas that should hold as support, when they don't, you know where they're going to trade to. And why do you want to know that, folks? Is because when you're entering a trade, if you can't handle the price point of where it's going to fail, meaning that's too big of a risk for you, then you need to wait until you get down to that lower area, because it's really not a problem for the 618 to fail and for it to move to the 0.786. You're looking for areas. These are absolutely leading indicators that you're looking for, and for information, because you can learn as much from a failure as you, in fact, you can learn more from a failure than you can from success. Remember, folks, there are no real failures. There's only outcomes, and that's what knowing these patterns here help us do. Let's go back and take a look at the outcomes. Let's go take a look at that Dow chart, and I'm going to go ahead and put this back on a daily basis. Now, I think on the daily basis, I only go back into 1998-ish or so, and we're going to go take a look at tops, see if we can see any signals out here as we get into the that might have been given to us. Let me see here. I'm trying to get back as far as I can with a minute to go. Where are we at here? Let's see here. So we're back here on the daily chart. We're just looking to see if we've got some bearish engulfing candles out here as it was making a high. And let's see, is this one back in 1999? You close at 11:07:19. You open at 11:11:06. Nope, that didn't work. When I say it didn't work, it didn't. Here's a bearish engulfing candle. There you go. And you engulf more than one. Now let me see here. Let's see, 11:326:04. Open at 11. There you go. So take a look at this back here in August of 1999. August 1999. You take a look at this bearish engulfing candle here. You could have got out at 11:998. That would have been a beautiful thing, folks. Have a terrific Friday if you're taking off. If not, stay tuned, because you got myself and Tom O'Brien, then the Basil Chapman show coming up from 11 to 12. Nico DeHaan with us 12 to 1. David White, the warm-up band for the Tom O'Brien Show. Thanks for being here, and have a great weekend, folks.
Great Basin Gold is a mining company engaged in the exploration and development